Hair, Love, Radio.
You're listening to Hair Love Radio, where we get into the nitty-gritty of what it takes to make your dreams a reality, start unlocking your potential, and live your best life, helping hairstylists, creatives, and girl bosses spread their awesome and light like confetti. You were made for awesome. Hi, welcome back to Hair Love Radio. I'm your host, Elizabeth Faye, and today we're going to talk all about smart money. I am here today with my financial advisor, Levi Swenson, and we're going to talk about a topic that we've never talked about on the Blogger podcast before. So this week, we are celebrating the launch of Workshop in a Box coaching program being open. What is WIB? So WIB is Workshop in a Box. I started it, and it's my personal coaching program. For years, I traveled and taught hairstylists, thousands of hairstylists all across the nation, and now we've taken what we do digitally and our entire team, from our media to our marketing to my coaches, my life coaches, business coaches, everything else, have teamed up together to create an incredible digital product. Workshop in a Box is a 12-month program where we take hairdressers through mindset coaching, money mindset coaching, building out their numbers and pricing, boundary setting, contracts, policies, and then we go into social media setup and social media marketing. Then we go through 6 months of intense color training, everything from traditional hair painting, working with clay lighteners, balayage, foil conversion, and so many more amazing things. Making color easy, working smarter, not harder, being aware of your time and the product you're spending, and charging accordingly. Then at the end, we dive into content creation, working with the actual professionals who've taught me everything I know and help our company from Hair Love to WIB run all the awesomeness that we do. And then we help you create a business plan and really focus on working on your business so you guys can take things to the new level. So this is perfect for 2019. And in our coaching program, Levi is actually going to, at the end, walk you through some more in-depth financial planning and smart money coaching. But we want to give you guys a full week of free education. So we have teamed up with some of the brightest minds in business and money this week. Yesterday, we did a webinar with Cassandra Platinum. And on this webinar, we talked all about how to avoid burnout in your career. And today we are talking about smart money. So I'm going to pick this financial advisor's brain about all the things that I've ever wanted to know and did need to know when I started. As hairdressers, so common, we're not planning for our future. I myself am guilty. I figured I would just figure it out when I was old enough to worry about adult things like that. But here's the deal. If we don't start planning for these things, then you end up in a situation where you're in a little bit of trouble. And this kind of hit me hard a few years ago when my mom has actually had a lot of financial struggles our entire life growing up. We were really poor, and I watched what lack of money, stress of money, and stress of preparation really did to our family. And it was really hard to watch. And it's actually a lot of the reason I'm so driven today. And watching my mom be so stressed out and not being prepared for if she gets sick, what happens when she retires, she's an entrepreneur as well, really started to stress me out and make me worried. And it's what led me to Levi. And Levi kind of had to hound me to get started. And I'm so grateful he did. And so we're going to talk about IRAs, what they are, investments, insurance, and being prepared. So what happens, guys, if we go skiing and we break our leg and I can't work? Or what happens or probably our hand, but what happens when we turn 55 and we want to start thinking about retirement? So most of us are entrepreneurs. We work for ourselves, or even if you do work for someone else, you don't necessarily have all these things set up for you. And I really don't want you guys to be in this position. So we're going to talk about that, and I'm going to welcome Levi to the podcast.
Yeah, thank you. This is pretty cool what you're doing.
Well, thank you.
Yeah, I don't think there's anything else out there like this, is there?
Not that I'm aware of. I mean, I'm sure there's wonderful coaches in all industries, but I think what we're doing is really helping hairstylists on a new level.
Yeah, it's pretty cool.
Yeah. So, and we're really passionate about it. I mean, my heart and what I really dedicate my life to is helping other hairstylists. And I have a soft spot in my heart for women entrepreneurs. And so we just really want creatives to be prepared. And I think it's easy to get wrapped up into your business and the artistic side and all of those things. And it's not really fun to like save money or plan for breaking your arm or, getting a disease. We've had a lot of girls on the podcast who are total boss babes who have multiple sclerosis, have Lyme disease. I mean, really life-changing things that have happened to them and they've had to overcome them. And I mean, heaven forbid anything like that happen to anyone, but it happens. And it's important to, be prepared.
It does happen, and it happens more often than you'd think.
So we have even gone as far as to make you guys a really fun free PDF that kind of breaks down some of the basics that we're going to talk about today. That way you guys can look over it maybe while you're listening to the podcast or later. It just has some really basic information that I found interesting. And so that'll be in your show notes where you'll be able to find information on today's podcast. And all you have to do is click on the link, put your email in, and it will automatically send you the Smart Money PDF. Okay, so Levi, you're my financial advisor as well as a million other people's, but tell us a little bit about entrepreneurs and saving money. Are you finding that they're doing a really great job of this or they're not? So give us some of that insight.
It's one of those things where a lot of people feel like they need to do something, but they're scared and they don't really know where to start or how to start. And so that's what we do with our clients is we'll say, hey, what are your goals? What are your dreams? What do you want to accomplish over the next 10, 15, 20 years when you get ready to retire? As far as entrepreneurs go, a lot of them haven't really started doing a whole lot yet, just because they focus on their baby, which is their business. It's their salon, it's their clientele, it's whoever else it might be. So yeah.
Yeah, well, and I think it's easy as a fellow entrepreneur, and Levi works for himself as well. But your business is like what's so overwhelmingly like what's happening in your life. And I'm always like, well, I need to put that money back into my business to grow it. And it is important to put a little bit of that aside. You know what I mean? For our future. So we were talking a little bit outside of the podcast about women entrepreneurs, specifically. Share a little bit of insight on that. It's something we're going to share more in our WIB program, but I found it really interesting because our audience is about 90% females. And so tell me kind of what the findings were on that slideshow.
So women have 3 different challenges when it comes to money and retirement that they don't really think about. They're usually making about 83% of what a typical man makes in the workforce. They're also the caregiver, so they have less working years than the male, and then they're living longer than men. So statistically speaking, they're living 5 years more or longer than men. So that money has to last longer.
Yeah, so they're living on less longer and we're making more. What the fuck, guys? Like the feminist in me is like equal pay. But anyways, I do think that is happening. And as an entrepreneur, we create our own paycheck. So that's like a really beautiful thing is no one really determines our success except for us. But that's interesting. And a lot of us are mothers or taking care of someone. That happens in our lives a lot. That is obviously common for a larger percentage of females and living longer. So that means if a man has a bigger retirement and he dies 5 years earlier, he's living really well and we're like pinching our pennies. So would you say we need to save more than a man or just make sure we're doing it?
I would say just make sure you're doing it.
Okay, that's good to know. So one of the things on the PDF that I'm going to share with you was how much do I need to retire? This is like a really basic question, but I feel like everyone is wondering. And so it says a typical rule of thumb is you can retire on a 4% withdrawal rate. What does that mean?
So what that means is that if you have $1 million saved up for retirement in whatever accounts they might be, that you can live on $40,000 a year for the rest of your life. So 4% withdrawal rate means you can take out 4% of the total amount that you have. So $1 million's $40,000, $2 million's $80,000 a year.
So is $1 million kind of the goal for retirement? Or, I mean, obviously everyone's goals are so different. Some people want to retire on 100 million, but is $1 million like a pretty average standard or is there no standard?
There's really no standard anymore. It used to be being a millionaire actually meant something. It meant that you had a ton of money. Nowadays, a millionaire is not uncommon. There's tens of thousands of millionaires made every single day.
Yeah. So I have an interesting question. Does being a millionaire mean that you made $1 million in a year, or that you own $1 million worth of assets, money at that moment?
So I think the actual rule or the theory is that you have $1 million worth of assets. But anymore, people are looking at millionaires as people with $1 million of liquid net worth.
Yeah,
so
that's kind of what I was
cash in the
thinking.
bank and other money like that.
Yeah, well, that's very interesting. Okay, so what is like the standard percentage that is like the best? Like you're a grade A student that you're putting aside every month?
20 to 25%. So it used to be, and a lot of people go by the rule of 10%, but that was back when you used to have a pension, you're an employee of somebody else, so you have a 401k where the employer's matching, and as entrepreneurs, you don't have that given to you, so you have to do all of it yourself. So 20 to 25% is where you need to start.
Okay, well, what's good about, that is a scary percentage, but what's also good about that is when you make less, you put in less. When you make more,
But it all should feel the same. So it's just getting in the habit.
Okay, that's good to know. Yeah. So what Levi did for me a few years ago, maybe it was even 3 years ago now, I don't remember, but is we set up an account and it's auto withdraw. And I remember being really nervous about it. And he's like, you know what? You just want to start, even if it's small, and we can kind of build up. And the truth is you don't notice it. It's kind of like your rent has to be paid. Like it hurts a little bit, but like it has to be paid, and you make it work. You drink less coffee, you shop less, or you do more hair. You know what I mean?
Yeah.
And so it really is one of those things, like when you make room for something, it's the universe will like fill it up, right? When you ask a client to leave your chair, the universe will provide a new, better client to fill that space. And so you really like have to trust that you're going to make it work, and it's important for your future, just like with investing in education and all those sorts of things.
Well, if you're not investing it, you're going to spend it on something that you probably don't really need anyways. So if a lot of my clients, if they have extra cash sitting in their bank account, they're going to find somewhere to spend that. Whereas if it's like if you just get used to putting that money away, the first couple months it's a little bit difficult, but as time goes on, you don't even notice it anymore.
No, and you really do make it up. It's just how it works. All right, let's talk about a few of the different options. So like, first off, what is an IRA?
So an IRA is just an individual retirement account.
Okay, and then there's 3 types that you have on this PDF. We have a Roth IRA, a SEP IRA, and a traditional IRA. So kind of explain like what those are, why they're important, all that.
Yeah, so they're different because they're treated differently because of tax reasons. So a Roth IRA, there's no tax deduction, meaning you pay taxes on that money today. It grows tax deferred, meaning you're not paying taxes annually. But when you get ready to pull it out, that comes to you tax free. The other 2 accounts, those are tax deductions to you today. So you'll be able to write that off and not have to pay taxes on that money today. It grows tax deferred, but it comes out taxable during retirement. So what a lot of my clients don't really understand is that right now you're probably in the lowest tax bracket you're going to be in. You have a lot of deductions, especially being an entrepreneur. You can deduct a lot of things for your business. And so it's probably best if we start having some money come to you tax-free during retirement, because you're not going to have those same deductions. You're going to have more money.
Ooh, that's a good point.
And a lot of people don't think about that.
No. Well, and when you're younger, usually you can kind of take the hit now versus when you're like empty nester, living small, living on less. That is really true. I love that. So,
and you can put $5,500 a year into the traditional IRA and the Roth IRA. The SEP IRA, you can do a total of $55,000 or 25% of your income, whichever one is less.
Okay, and then when your clients come to you, do you just kind of like base off of their situation and their goals, pick what's best?
Yeah, so it's not a cookie cutter financial plan. We dive into your goals, your dreams, what you want to accomplish, and we help put pen to paper and say, hey, where do you want to end up and how are we going to get you there? At that point in time, it's just math. It's what you have, what you want.
And how we do it.
And how we're going to do it.
No, that makes sense, because one size would not fit all, especially. Well, and someone who is working the next 3 years and then planning to take off 10 years to raise children, their game plan is different than someone starting a startup company.
Right.
And hoping it turns into a multi-million-dollar business. Okay, so one last question about IRAs. So IRA is your retirement. When do you take this out?
So the rules for IRAs is that you can't touch those until you're 59 and a half. So kind of a weird age, but 59 and a half is when you can actually have access to that money without getting taxed and penalized.
Okay, I have a weird question. What if you die before 59 and a half?
You have your beneficiaries would get that money.
Okay, your children, spouse, loved ones, friends. Okay.
Yeah.
All right, so you can take it out at 59 and a half. Is there any way with a penalty to take it out before?
Yeah, you'll get a 10% penalty. So
okay, pretty high.
It's pretty high, and it's going to be taxed as income.
Oh, shit.
So if you roll some money out, you roll $5,000 or $10,000 out of that account, you're going to get taxed at or penalized at 10%, and then you're going to get taxed as income on that $10,000.
So you really don't want to take it out unless you're like in dire need or something. Yeah.
No, this is something that you got to set aside and just treat it. I tell my clients to try to treat it like a bill where they're just putting it away and forgetting about it. And at 59, 60 years old, we can start to look at that money.
Okay, and it does grow, correct?
Yeah, so all of those IRAs are tied to the stock market. And I know a lot of times people think, well, I have a Roth, but they don't really understand that a Roth, you can be invested in numerous different accounts. So you can be aggressive, you can have a lot of stocks within that account, you can be conservative, you can have a lot of bonds in that portfolio or that account, or anywhere in between.
And you manage that for your clients?
And we manage that.
Okay, question. So, like really basic math, if someone started at 30 and they want to retire at 65, or let's just say 59 and a half, right? At 60, so that's 20 years, right?
30.
Yeah, that's 30 years. Oh my gosh. So don't hire me to be your financial advisor. Also hire people who are better at things than you. Okay. Anyways, so 30 years. Let's just say 30 to 60. And what's an average, like how much would they have to save to retire on $1 million or something like that? Like give me some scenarios of like what you think, because I bet you we have a lot of listeners who aren't 18. They're probably 25, 35, a little bit, maybe, 45. And so they might be starting this a little bit later. And obviously the earlier you start this, the better, but what can they expect to retire on if they're putting in a certain amount? Do you know that math?
That's a little bit difficult. You can assume if you're a little bit more on the aggressive side that you're probably going to get an 8% annual rate of return over the long term. Mm-hmm. And so it's just working the numbers backwards. So I don't have those numbers on me.
Yeah. Okay. I was just curious. What do you feel like the average person within like making about 50 to 100,000 a year is saving for an IRA, or what would you recommend? The full 25%, or would you diversify their portfolio?
I would diversify their portfolio. So okay. I would put some money into a Roth IRA. You can do $5,500 per person. So if you're married, you could do a total of $11,000 into that account. And then we would want something else within your portfolio, so it's not all tied to the stock market. It's interesting that you asked that, because a lot of times when I'm talking to people, they'll say, well, I want to diversify my portfolio, and what they think that means is they'll buy one mutual fund that has 1,000 different stocks within that mutual fund. But when I'm talking diversification, we're saying, hey, let's have money in different buckets completely separate from each other. We'll have some money in the stock market, we'll have some money out of the stock market.
Okay, so would an example of that be like cash value life insurance or whole insurance?
Yeah.
So is that like totally a different bucket?
Completely different buckets, not tied to the stock market at all.
Okay, so that's like very conservative, very safe, always there for you. So that's one of the things that I have. So let's talk about that a little bit. Like, what is that? It's a form of life insurance.
It's a form of life insurance, but it has a cash component to it. So it's a lot like owning your house, where every dollar you're putting in there, you're building up the equity within your account. Same with this, it's guaranteed to grow every single year. So you'll never wake up with less money in there than you had the day before, which makes a lot of people feel comfortable taking a little bit more risk with the stock market money, knowing that they have this safety net for them during retirement, and they can actually have access to that money too. So you can, like you talked about earlier, bank on yourself. So you can take money out, use it for another investment, and then pay yourself back.
Yeah, so let's talk about that. We talked about this on our Facebook Live we did for our 1 week of free education. And so on that, so he was explaining there's 2 types of insurance, and one of them is term. So what's term? Let's do that first.
So term is just like renting your home or like car insurance. It's extremely cheap. Like a 30-year-old could get $500,000 for $20 a month. So it's very inexpensive. It does the job. If you pass away, you would get that money. That $500,000 would go to your family. But there's no other benefit unless you die.
So it's great to have if that's all you can afford, but what's even better would be something. So cash value and whole insurance are the same thing,
Same
right?
thing.
Okay.
Yep.
So that, like we were talking about on the Facebook Live, so which you guys can totally go watch. It's very similar content, but on the Facebook Live, we were talking about, so that's growing in your cash value insurance plan. So let's say in 7 years, I want to open up another salon. I could actually take a loan from myself and pay myself back. And I'm like, that's really cool. My dad actually does that. I think it's so cool.
Idea.
Yeah.
And it's tough because a lot of people don't have the patience to watch it start to build. It does take a little while for that cash value to start going, just like any sort of investment. But over time, it turns out to be a phenomenal place to warehouse some cash. And my clients generally appreciate that the longer that they have it.
Yeah. Well, and him and I were talking outside of the podcast. I was like, so what is the really the best thing I could do for my son and my, future children? I'm not pregnant. That sounded like I was. I'm like, my future child. I just mean like if I have another one. But anyways, and he was saying this is actually a great way to do it because if you do, what is the account called for college?
A 529 account.
So if you do one of those, you actually have to use it on school.
For higher education.
Yeah. So if they want to be an entrepreneur or a hairstylist, or you want to get them a car for, I don't know, they're going out of town to trade school, or you want to help them get a house, anything, you can't. You can't. No.
But
if you put it in your whole life insurance policy, you can use it for whatever the hell you want.
Right. It's your money.
Yeah, that's awesome. And it does build, right?
It builds. So right now, ours is growing at a consistent 5%. Over the last 30 years, it's averaged 7.42%.
Yeah, that's awesome. So it just kind of builds, maybe slower or faster, but it
Yeah.
builds. So that's a nice steady thing to have. And you still have life insurance if anything happens to your family.
Yep.
That money, if you die, goes to them, right?
Yeah. So you'll have that. The death benefit will always be there. So you, just like the term insurance, it's good for a term or a period of time, whether that's 10 years, 20 years, 30 years, it doesn't matter. At that point in time, it's going to expire and you're going to be done. The permanent insurance or the cash value insurance that you're talking about never goes away. So you could be 120 years old and still have some life insurance.
Yeah, that's awesome. So so I've heard the word before, living life insurance. Is that what that is?
Yeah.
Okay. So that means you can take money out
Right.
basically as when you're alive. Not
So you can
when you're
use
dead.
it. So there's other benefit besides just dying.
Yeah, because hopefully we live a long life. Yeah, yes. Okay, awesome. Okay, so another item of business that I think is super important, and I don't know about you guys, but as a self-employed hairdresser, doing things that could hurt my wrist or my hands or my body really makes me nervous. And sometimes it actually infringes on my quality of life, or like hanging out with my kids. Like if Strider, he really enjoys skiing. The whole time I'm like, shit, if I sprain both my wrist, how am I going to pay the bills? How am I going to do this? Like there's this inner dialogue that's very stressful and I can't just enjoy the family time. And there really is a way to be prepared for things like that where you can just ski down the hill and break all your wrist. Just kidding. But like you do want to be prepared if that happens, or heaven forbid you get diagnosed with something very serious. If you guys are avid listeners of Hair Love Radio, you know Lacey's one of my great friends, and KL, and they both have been diagnosed with serious diseases that have played huge roles in, changing their lives and careers and different things. Lacey's a single mom. So heaven forbid something like this happen. There's no way to really make up or fix it, but this does take off a burden and an aspect of it so you can really take care of yourself and do what you need to do, and your children or your business or whatever that is. And so let's talk a little bit about disability insurance.
Yeah, so there's two different kinds of disability insurance, or two different times that they pay out. There's short term, which is anything less than 3 months. And then there's long term, which is anything more than 3 months. And the way that it works is you can get 60% of your income, or the money that you're showing on your taxes.
Ooh, that you're showing on your taxes.
So that's going to be a problem for a lot of people because they don't want to pay taxes.
Yeah, let's talk about that for 1 second. So my first accountant advised me to not show that I made anything for like the first 5 years. He's like, you can get away with that. That ended up being something that I wish I wasn't advised to do. And the reason is like, obviously you're supposed to pay honest taxes and you can get in trouble if you don't. But the other reason is when you show that you make money, you guys can get car loans, you can get houses, you can get a business loan to build your dream salon. And as an entrepreneur, I'm a huge fan of you building your dreams on other people's money, which that means loans, that means debt. And I mean, we could go into this in a whole nother time, my like theories on like leveraging debt to grow businesses, but you can't get that. And the first time I bought a home was as a single mom. And I'm going to say this nicely. It was a living fucking nightmare. It was horrible. I had to sell my car. I had to like beg my father to lend me $7,000 to pay all this extra money on my taxes to show that I made enough money. And then I had to pay him back in a few months. It was just horrible. The process was terrible. It was a really terrible experience. And then fast forward to the home that I bought this last year. I had been paying honest taxes for, I don't know, 3 years or something. And it was such a better experience. Like everyone was like, oh, getting a mortgage is so horrible. And to me, I was like, this was a walk in the freaking park. Like I called my accountant. He showed what I made. I got approved for the amount I could. There you go. My loan officer did the rest. And speaking of accountants, my other advice to hairstylists, which we should get Wayne on the podcast actually, is hire an accountant. For you to have someone do your books as a booth renter, just you, full books, it is anywhere between $30 to $60 a month. That is worth the money. And if your business grows or you get employees, it might be a little bit more. It doesn't seem like a fun thing to pay for. It's so worth it though to make sure someone's making sure you keep up on your licenses and they handle your books. They kind of tell you what you need to do. And when you go to do other things like open a salon, hire an assistant or an employee, or go move to a studio or whatever that is, you have someone to help you who knows your business. And it is a walk in the park. Like I could not run my business without my accountant. It's the best money I've ever spent. And we spend a lot more now that we have multiple businesses and employees, but he grew with me. And so here's something exciting. We are launching merch next week or the week after. So we'll have all these awesome custom items for you for our Hair Love tribe. Woo! Oh my gosh. We're launching merch and we're so excited. Anyways. But if it weren't for my accountant, it would have been much harder. I was able to call him, have him help us with licensings, work with a manufacturer, all the things we were doing to help us get this going for you guys. And it was a much easier process than it would have been outside of having one. So it is like, get a good accountant, have a financial advisor. Every single one of you can afford it on some amount because you can have term life insurance for $15, an accountant for $30 a month, right?
Right.
And then let them grow with you. So anyways, back to where we were. I'm veering off. We were talking about disability insurance. So you were saying you only get 60% of what you claim on taxes. So if you claim $5,000 for the year, it doesn't really help you to have disability insurance.
But if you claim $50,000, you can get $30,000 a year or $2,500 a month, which comes to you tax-free.
Yeah. And it's worth it to pay, the $2,000 to $10,000, depending what you're making a year in taxes to be safe, feel comfortable, not get in trouble with the government, heaven forbid. So it's worth it to spend that money every year. So that way you can buy the house you want, if you want to open a salon, if you want to have disability insurance, because there's really no point in having it if you're not claiming an income.
Right. Yeah, you have to claim something to get to be able to qualify for.
Yeah, and
a
if you're
bigger
only
amount.
claiming $5,000 a year, it doesn't really help you.
No.
You might as well just save the money you spent on disability insurance.
Right.
Yeah. So, anyways, back into that. So you get 60% of that, and this is not short term. This is like 3 months or longer,
Correct.
right?
Yeah. And it's, I mean, you can get disabled from numerous different reasons. You can, like you were saying, break your arm, or get arthritis in your hands, or mental disorders. Mental disorders are one of our bigger claims. Someone who gets depressed and they can't go to work and function the way that they used to, that's considered a disability.
Yeah, absolutely. Well, anything that hurts your business and you need to take care of yourself and it's serious.
Yeah.
Yeah, no, and that's awesome. And honestly, this is like a full nother topic. There's a lot of mental health that goes on in hairdressing and in the world today, but it's been really awesome on Instagram. A lot of bigger influencers have been really open about it. And so anything from severe depression to, I mean, an eating disorder, an addiction, I mean, anything like that, right?
Right. Yeah. Anything.
Because those are things that we don't think about. When I think of disability, I think of getting a disease or breaking my limbs. You know what I mean?
Yeah, breaking or amputation or something like that. Everyone thinks it's going to be some drastic thing that happens to you.
Yeah, but if you're going through like a horrible depression spell and you can't, it would ruin your business and you need to take care of yourself.
Right.
Yeah.
Yep.
No, that's awesome. So, I mean, I know the prices vary, but like what could someone possibly be paying for disability every month?
I mean, you could get as cheap as $15 to $20 a month. So it can get down there pretty inexpensive. And it just depends on your income, on how much money you're going to qualify for.
Well, that's super affordable. And obviously, if you're paying more, it means you're making more. So it's worth it.
Right.
Yeah. And that is because you're getting more money back, right?
Yep.
So that's
Exactly
why that
right.
goes up. So that makes sense. And then, so short term is, I know you don't do short term insurance, and I'm totally going to talk to my insurance guy about this because I think it's interesting. But is Aflac something you suggest?
If you don't have a nice cash reserve in the bank, so if you don't have enough cash in the bank, then it makes sense to have short term. But if you can weather a storm for 3 months, it's not a huge deal to have short term disability.
That totally makes sense. So 3 months means 3 months of like booth rent, home rent, food, like all your bills. Is that how you would calculate 3 months to live off of?
Yep.
Okay, so if you need $3,000 a month to live, I'm just picking a number, $9,000.
Correct. Yeah.
That's your emergency fund.
And you set that aside and forget about it. A lot of people, when they see that $9,000, they think, going in coffee is an emergency that day, and they'll go and start spending that money, which becomes easier to do.
Yeah, that's super true. So this is off topic, but do you have any advice for having a savings account for something like that you don't touch? Like maybe a different bank, somewhere you don't look at it? Like what's your advice on that?
I like having a different bank, something you don't see on a regular basis, just because from my perspective, when people see that extra cash in their bank, it's easy to go spend it, go on a trip or whatever it might be. It's easy to do that, knowing that you have $9,000 or $10,000 sitting in there.
Yeah, but if you don't see it, because I was just thinking of that. I was like, well, if you let's say you bank at Wells Fargo and Chase you just have a savings account, you don't even look at it, you just deposit into it. You can't easily transfer, like you could, but it's more steps than just like a simple transfer it to your credit card.
Absolutely.
Yeah, no, I like that idea. A little good hot tip from Levi. All right, so, and if you're someone who saving $10,000 can take a long time in the beginning of your career, for sure. So maybe something like Aflac in the meantime makes more sense until you're able to
absolutely
do that. Because $50 a month is much more affordable until you're able to do something like that.
And I don't think Aflac's that expensive. I think it's pretty cheap.
I don't think so too. I'll find out. But I remember I was looking into it for our booth rental salon, and I was looking for an owner's policy, and because it was cheaper for the girls to all split it, whether you provide it or they pay for it themselves. And it ended up being, I think, anywhere between $40, $60 a month for them. And I think it depends all of the details. But anyways, it wasn't bad, and it would be worth it if something happened.
Oh, yeah.
All right. So Levi, one of the things is I wanted to bring him on here to answer some questions, kind of walk you through this, because going into a financial advisor's office is really nerve-wracking, honestly. I remember thinking the first time, like, I'm not rich, I can't have a financial advisor. It like sounds so fancy and scary, and you're afraid to like, you know, you're like, well, I'm not like a multi-million dollar, you know, I'm just a hairdresser. And so it doesn't matter. It doesn't matter where you fall on the scale, right? 10,000 a year or 10 million a year. You need to save for your future.
Exactly.
So
the sooner you start, the better it's going to be for you long term as well.
Yeah. So even if it's something very small. So Levi's office is actually able to help you guys, which I think is really exciting. I think it's great to give you good information, but then like, what do you do with this information? Because that's the next hardest part. So I fully trust him. He works with a lot of my friends who run very large companies, are very successful. He's freaking incredible at what he does. You're getting like top of the line. But with that, we're going to have in the show notes his website and his email and the office number. And Trevor will answer the office number. He's wonderful and he can help you. And just because I would be nervous on the other end of this, what should people say? Just that they heard the podcast and they'd like a consultation?
Yeah, just say that they heard it from you and we'll make sure we take care of them.
Perfect. And so he'll be able to tell you, you know, what insurances are best for you. And he has a whole team of people who are really helpful. So they can help you with what's best for you, what retirement plan is best, and kind of help you grow. And they'll want to know your goals. And do consultations cost anything?
No. So they're all free. We'll take care of anyone that you send us.
That's awesome. So, and remember, a little bit is worth doing. So just start working on it and let them grow with you, just like an accountant and everything else. Do they have to live in Utah? That's important.
No. I have clients all over the country.
Okay, perfect. So they can live anywhere in the U.S. and this is fine.
Yep.
Perfect. So this will all be in the show notes. And a big warm thank you and welcome to Levi. Thank you for being on Hair Love Radio.
Hey, thank you. That was fun.
Yeah, this was a great time. Well, we hope this was really helpful. If you guys have any questions, as always, write on in. And remember, Workshop in a Box is open for enrollment, and it will be open for enrollment until December 9th or 8th at midnight. I should know this. I think it's December 8th or 9th. Anyway, so it's open for enrollment. If you guys have any questions whatsoever, you can hire me and my team to coach you, and we're freaking amazing at it. We love you, and we really want you guys to follow your dreams. You should know that by now. All I want is for everyone who is around me to be successful and happy and go after their passions and make it their purpose and make it their paycheck.
Hair, Love, Radio.
Thank you guys so much for tuning in, and we'll see you on the next podcast. And as always, we hair love you. Bye, guys.